Hello guys, welcome to i-tutor Academy. In today's session, we will start with the 7.5 Unit 7 MMPC 004. That is marginal cost. The technique of marginal costing is concerned with the marginal cost. It is therefore necessary for you to understand the term marginal cost correctly. The Institute of Cost and Management Accounts, London, has defined marginal cost as the amount at any given volume of output by which the aggregate costs are changed if the volume of output is increased by 1 unit. On analyzing this definition, we can conclude that the term marginal cost refers to an increase or decrease in the amount of cost based on the increase or decrease of production by a single unit. The unit may be a single article or a batch of similar articles. This will be clear from the following example. Okay, you just go through this example from your Ignou study material MMBC 004. The marginal cost ordinarily is equal to the increase in total variable cost. Within the existing production capacity, an increase of 1 unit in production will cause an increase in variable cost only. The variable cost consists of direct material, direct labor, variable direct expenses and variable overheads. The term all variable overheads includes variable overheads plus the variable portion contained in semi-variable overheads. The accounts concept of marginal cost is different from the economist concept of marginal cost. According to economist, the cost of production, one additional unit of output, is the marginal cost of production. This shall include an element of fixed cost also. Thus, fixed cost is considered according to the economist concept of marginal cost but not according to the accounts concept. Okay, here is an illustration also. You just go through it, and the graph also here based on this. So you just refer this. In case any doubt, you can contact us also. So here is an equation also. Marginal cost is equal to direct material cost plus direct labor cost plus other variable cost, or total cost minus fixed cost. So that is an equation based on the marginal cost. Next is segregation of semi-variable cost. As explained earlier, marginal costing method required the segregation of all cost in two parts, fixed and variable. This means that the semi-variable cost will have to be segregated into fixed and variable elements. This may be done using any of the following methods. One is levels of output compared to level of expense method, high-low method, degree of variability method, scatter graph method and least square method. And here is an illustration section. You just go through it, and here is one equation also. Where the element included in semi-variable expenses is equal to change in amount of expense divided by change in activity or quality. And high-low method is here, and this method is similar to the previous method except that only the highest. Many methods are here for the same, so you just go through it. And variability, degree of variability method is, in this method the degree of variability is estimated from each item of semi-variable expenses. Okay, so that is that. And scattered graph method also. So this is an example of that graph. And the method of least square is here, and this method is based on the mathematical technique of fitting an equation with the help of many observations. So linear equation. So here is an equation based of marginal cost is there. Okay, so many methods are finding out the marginal cost, and you just try with the practice with the example, so it will more easy for you. Next is contribution. So here is also an example starting, and this is also a mathematical equation based. So here you just try to do this based on your Ignou study material. Okay, and next is break-even analysis. The term break-even analysis refers to the system of determination of that level of activity where total cost equals total selling price. However, in the broader sense, it refers to that the system of analysis that determines the probable profit at any level of activity. The relationship between cost of production, volume of production, profit and sale value is established by break-even analysis. The analysis also known as cost volume profit analysis. Okay, and how it will helpful, one by one points are there, you just go through it. And break even point also there, it refers to the level of activity where the income of business exactly equal to the expenditure. Okay, so there is no profit, no cost, there is it is equal to income and expenditure. Okay, so illustration section, break even point output and break even point sale is there. So illustration you just try to do it, it will help you for your understanding. Okay, and activity also based on the break even analysis. And utility of marginal costing, the technique of marginal costing is of immense use of the management in taking various decisions as explained below. Help in determining the volume of production, helps in selecting production line, help in deciding whether to produce or procure, and helps in deciding method of manufacturing, and helps in deciding whether to shut down or continue. So these decisions are based on utility of marginal costing. Okay, and so based on the illustration is here, you just go through your material for the same. And next is limitation of marginal costing. What are the limitation? First one is difficulty in classification of cost based between fixed and variable element. And next is difficult applications. These two are the limitation of marginal costing. And difficulty in application means the marginal costing technique is challenging to apply in many firms. Its scope is highly circumscribed where job costing is the need. And summary of this unit is marginal costing and absorption costing are the two techniques that can ascertain the cost of production, job or process. Absorption costing is also termed as traditional or full cost method. According to this technique, the cost of a product is determined after considering both fixed and variable cost. Okay, so we already discussed these points. So you just go through the summary section and keywords are there. If you feel any words are difficult from this unit, you just refer this section. And self-assessment questions also here. Explain the technique of marginal costing briefly. In what ways you consider this technique useful in management accounting? And next also explain and bring out the means of income determination in a comparative form under marginal and traditional costing system. Explain the different method for segregating semi-variable overheads and what benefit are gained from marginal costing. Are there any pitfalls in its application? State whether each of the following statement is true or false, and from the following choose the most appropriate answer. So one word answers are there, there is choice also, and calculation based questions also here. Okay, so and here is fill in the blanks questions also. So you just go through one by one, try to answer this question. It will help you for your term and examination. And when in between, in case any doubts based on this, you can answer, contact our contact number also. You can comment on our comment box also. We will reply for your queries. Okay, and for more videos, you just do like, share, and subscribe our channel. Thank you so much.
i-tutor ES presents Ignou MBA, complete syllabus coverage classes and individual semester base, subject coverage program for MBA students online and flexible sessions. For more details, contact 62382 1788.